Hey traders, let's check in on the stock market today. We have a new wave of fear on our new COVID variant, mostly due to a lack of information. Is this a dip to be buying? Let's look at the charts. So the bears strike overnight, and again, think of trading like war, and that's what the Japanese did when they came up with the Japanese candlesticks here back in the 1800s. It was very ingrained in their society, and all you got to do is watch some history of the samurai back in 1400, 1500, even before that. And man, it was brutal. There's a good Netflix show about that. But view it like war. So the best time to ambush your enemy, what better time than after a holiday where people are hungover and fattened up and sleeping? That's what happened today as far as the bears just coming out and viciously responding to this new wave of fear. So first things first, this is the knee-jerk reaction, right? So new COVID strain, and in South Africa, and potentially some bans of flying going on, and what's going to happen? Are we about to lock down again? So essentially, that's what the market was reacting to. And keep in mind that this is, again, a knee-jerk emotional reaction. And now we have to wait until we get information. We have some of the major companies coming out and saying, oh, we can do another, a different strain vaccine. And that's going to potentially alleviate some fear. But again, we need more information. We just don't have enough information. We don't know if there's going to be travel lockdowns. We don't know how this is going to pan out. So when that is the case, any uncertainty, instant reaction, fear, worst case scenario. And now we watch for the headlines, and we know that there's going to be headline reactions as we continue to watch how things develop from here. Keep in mind, in my opinion, the more strains we get and the more times we go through this, it'll be less and less impactful. Remember when Trump was tweeting about the China trade war, how it was massively impacting the market. And then the more we would hear about the China trade war, it just became, we became numb to it to a certain degree. So it's possible that with COVID, we get enough strains and enough times of this taking place where the markets then just become a bit more accustomed to it and less significant reactions. But for now, the bears have absolute complete short-term control and the bulls have absolute complete long-term control. So how do we deal with that situation where it's different in both directions? So what do I mean? Well, clearly, obviously, the bears had a lot of control today. We're in an hourly downtrend, and we were in shorter term time frame downtrends. But if you look at the S&P 500 weekly chart, anything above 42.72 is a weekly high or low, keeping the bulls in complete control. The last time we saw that significant consolidation, again, everybody was wondering, is this going to be the top? Next thing you know, it's a monthly bull flag back to all-time highs. So these weekly higher lows are very key for me. That being said, definitely want some downside exposure just in case this does pan out as far as becoming more significant impact as far as, the world. So we're going to continue watching these headlines for the rest of the year at least and into next year. And we're going to be watching our short-term downtrends as our guide. We had a clear 5-minute downtrend on the S&P 500 all day today into the close. The close bounced, set an hourly lower high, and then dropped to a new low. Hourly RSI is oversold, but one thing I was pointing out in the chat room today is look at the 4-hour RSI. I mean, just a month ago, we dropped to a 4-hour RSI in the teens, and today we were down at 26. So it can always go lower because where we stand right now, we're not in extremes. We're not in an extremely oversold environment. So it can always go lower, and you definitely want to protect against that. So again, always having some kind of hedge position. A lot of people are doing that into this weekend because now we have 2 days of no trading and headlines and more information. And what you're going to see is this variant's going to pop up over in this country, and then they're going to report it in this country. And we have to watch to see every time another country reports it, are we going to get a bearish reaction? The cruise liners and the airliners are getting crushed. Growth names are getting crushed, and the stay-home names performed a lot better. Netflix set up for a gap up open as the cruises and the airliners. I mean, the Jets ETF was down 9.5% at one point today, which is a huge drop. So again, we've been through this before, right? We know that there are certain names that performed well in that once the initial dust settled and we found a bottom, some names performed really well and some names were significant laggards. So we had the stay-at-home names rocket to the upside. We had even the cannabis space did well once they were designated as essential businesses that were going to stay open. So we have a roadmap as far as what we can look back on and say, okay, well, what played out last time? And again, this is only day one, and I would need a lot more weakness and a lot more bear follow through. What stands out to me, what will stand out to me if the bears can prove this, again, the downtrend being confirmed, because the initial wave of fear is not surprising. When did things get ugly? And I learned a lesson here because I covered a short on this bounce back on the initial dump. This is when things got for real. This is a big reaction, but an initial reaction. Knee-jerk reaction, emotional, digested, okay, let's get some information. And then when you bounce and go to the lower high and lower low, it's no longer a knee-jerk reaction. That is significant proof from the bears of their control. So this time around, we will find a support level. We will start a daily bounce, and we will either V-shape, which we've become very accustomed to, right back to the all-time high, or we will confirm a daily downtrend, which will then have us say, okay, we need to be a bit cautious, bigger picture here. Again, for me, it's all about the weekly levels, but a confirmed daily downtrend would be a big check mark in the bear column of things. NASDAQ, daily downtrend confirmed with that little lower high and lower low. Again, these are the futures charts. So we look at QQQ, and it's not really a confirmed downtrend at this point because of the less trading over the holiday here. So 387.53 is a key level. Technically, QQQ is in a daily uptrend right now, and it's a potential head and shoulders. You know, if we were to hold 387.53 and bounce, we would be cautious of a head and shoulders forming, but it's a daily uptrend right now. So again, it's not, you know, this isn't significant weakness at this point. QQQ can hold 350 and form a weekly high or low. So we can drop 10% from this moment right now and still be in a weekly uptrend. So again, you have to be looking at all time frames. Yes, big red day. Bears in complete short-term control, bigger picture, that's not the case at all. And we will need a lot more bear follow-through for this to be a prolonged pullback. IWM getting hit the hardest, one of the hardest hit sectors. And again, it's just because when things are sunshine and rainbows, people get more aggressive and go in these smaller cap growth names. And when there's any kind of fear, these are one of the first names to sell off. And we already started to sense this is a bit of a red flag in the size of the pullback from the all-time high at this point. And then today's action obviously just magnifies that. We're still in a weekly uptrend, but to go from a 7-month sideways range into a bull break into all-time highs and then give that back, that's a red flag. And it's creating space now where next time we do bounce, there is space for a weekly lower high to be the result of that bounce. So definitely a bit of a red flag in growth. Weekly support is 216.76 for the bulls to try and keep the uptrend. But again, even if we do keep that uptrend, we have to be cautious of the weekly lower high being the result of the next bounce that we see from here. XLF. So XLF, we've got a clear daily lower high set. Big time bounce last week, but a lower high, anything under 40.36. And we set that lower high by 20 cents, 10 cents, and dropped to a lower low. So the daily downtrend continues. And someone on CNBC, I don't want to take credit for their statement, but just watched a little clip and they were right on where they said this reaction is it's magnified more because the last couple of days was going in the opposite direction. So, you know, if this news comes out while XLF is on 5 red days in a row, it's not going to be as significant a bearish reaction as opposed to just bouncing 4 days in a row or 4% in 2 days. And again, that being the sector that is more significantly impacted, it's been going up. So it was a reassessment, again, the snow globe was shaken up real quickly. And essentially the downside move was magnified a bit more because people buying the financial sector dip to start this week were going in the complete opposite direction now that we have this news. So daily downtrend still intact, weekly uptrend still intact, anything above 36.03. It is no longer a weekly bull flag, but it is still a weekly uptrend. And we have a clear daily downtrend guide where anything under 40.26 next bounce is just a daily lower high. Healthcare started the day holding on really well. It was actually up a good bit and then saw weakness from there. But again, the weekly time frame is this equilibrium tightening up with our high, low, lower high, lots of space. Anything above 124.50 is a weekly high or low. So we're anticipating a weekly equilibrium in the healthcare sector. And I made a quick bull attempt. Again, a first very strong 5 minutes. I tried to play XBI bullish this morning first thing, and it started all right. And as soon as we double top rejected from the high of yesterday, this is just a quick trade review. So low of the day at that point, 119.20. We start making a bull move. I make an entry in the 119.90s saying, okay, I see XLV is really strong. And if we're going to see strength in some sectors, I'm looking for that strength in the healthcare and biotech sector. So we then hit the high of the day, which rejects from the high of Wednesday. We broke it by 3 pennies. As soon as that happens, red flag. I had my stop under the low of the day. As soon as that happens, I move my stop to break even. I'll still give the bulls a chance, but if you get back down to 120 after a double top rejection, that's a red flag for me. So that was just an example of where I reacted to short-term indications that had me cut my risk significantly. And that was, and honestly, the hindsight for me on this lesson is, okay, great, you did great, but flip bear. On that new low of the day, if you go bear there, you have a huge win. So a little bit of a lesson, but takeaway for me is good exit. Now just work on flipping to the other direction a bit more. So daily bear flag confirmed, lower high and lower low. We know the biotech sector has been one of the weakest sectors over the last 7 months, and here we are at 2021 lows, and you can't say that for many sectors. So new daily resistance, double top, 120.53. Semiconductors, daily is still in an uptrend. Anything above 290, 155 is a daily high or low. Similar to the QQQ chart, we have to be watching for the potential of a head and shoulders, but the daily uptrend is going to be our guide, and the weekly uptrend is going to be our guide. Anything above 248, tons of space for a weekly high or low to form on this pullback. So again, if we see fear in the broader market persist a bit, we look to the names that we know will not be very negatively impacted if this is the real deal as far as a new variant. So we will be looking at dip buying opportunities, again, once the dust settles, because everything gets thrown out together in irrational fear, and then the dip buying goes to the names that will likely have less impact, even if it is, one of the worst case scenarios. So that's when we're going to be watching. Again, dip buying, you can't just assume, well, Netflix, I'm going to buy that Netflix dip, because Netflix today held up better, absolutely, and it was green. But if you bought the open, you ended up red. So the more fear there is, the more everything correlates with that fear. But once a temporary bottom is set, that's when you see the significant dip buying in these specific places that have less of an impact. So start your shopping list and hope that things get brutal, because that will be a good buying opportunity, just like it was last time around. I mean, how many names did we see run 50 to 3,000% in response to the COVID low to the euphoria high? And I'm not expecting anything like that, because again, this is another version and we've already gotten used to it to a certain degree, but there will be dip buying opportunities when the dust settles on this new wave of fear, and you want a shopping list for the names that will be less impacted. Tesla surprisingly tight today, daily inside bar, and watching Tesla because we got a nice tightening range here, lower high set, and we're now scouting a higher low, anything above 978, and watching for this pattern to continue to tighten up into December, and looking for a break of this pattern to indicate some momentum into the start of next year. We're either going to confirm a weekly downtrend or continue tightening up into a bull break that will have us talking about all-time highs again. So very interested to see how Tesla is going to break from this tightening range. The dollar pulled back on the daily, so cooling off RSI levels. Weekly RSI was getting real high. Tons of space for a weekly higher low to form. Red flag for the metals is they dropped hard too. Silver, weekly support broke, not by much, but it did break. Big red day on silver, even though the dollar was weak. Gold started strong, gave it all back. So we're getting red flags in these metals. And again, at this point, I'm just sitting in my initial starter positions. My silver position is now a bit red. My gold position is pretty much break even, and waiting for things to play out a little bit further. But every drop we see from here increases the probabilities that a monthly lower high is being set. And looking at XAG silver here, This is a potential monthly bear flag. We're in a monthly downtrend, lower high, lower low. Is this another lower high? And are we going to drop to another lower low? That's a possibility that is absolutely on the table. So again, got to be cautious. And I will certainly bail from my swing starter positions if this weakness persists. Oil with a big drop. So again, massive drop to the downside. Why? Because what if flights are restricted? What if travel is restricted? All of these what if scenarios that are part of the knee-jerk reaction to fear. The daily downtrend continues. The monthly consolidation is underway. Anything above 60.77 is a monthly high or low. We're going to be watching EMA 12. The weekly is dropping real hard, and we're back to daily oversold conditions. The best time to buy oil previously was daily oversold. But again, this is one of the sectors, and the sectors that are going to be most impacted are your travel, and oil is related to that. Again, airliners and cruise liners just significantly impacted by any of these short-term headlines. So keep an eye on oil to be headline sensitive as well. Tons of space for lower highs anytime we bounce from here. But again, with irrational fear, and again, we don't know if it's irrational. It might be rational fear. But we eventually always reach an irrational level of fear that leads to opportunities. Natural gas, 12-hour falling wedge, finally broke bull. We were watching this one for a while. Is this our monthly high or low being set? Maybe. Could be a monthly bull flag. Daily time frame, nice break from our sideways range. Now we zoom out to the weekly. Anything under 6064 is a weekly lower high, but a nice shift in momentum, and even more nice than the shift in momentum was just the beautiful clarity of that pattern and a nice clean break. So that is where we stand. I personally still have some long exposure, SPY no touch, still got those metals, still got a core of MSOS. I just did a cannabis video specific to the sector, check that out. And I did swing a little SPXS and was just trading the 5-minute downtrend on it today, and just have to have some downside exposure heading into this weekend with the possibility of swirling headlines. But other than that, I will be patiently watching for dip buying opportunity, but patient is the key word. And the last thing I'm going to do is go real aggressive here into the end of the year and risk giving back gains on what has been a great year. So I will be patient and scouting opportunities. But again, someone who's cash, bring on the red. As irrational downside as possible, because that's when the best opportunity will present itself. All right, hope you had a good holiday. Appreciate you watching. I don't have any new end of the video content, so I'll stick something older at the end. Have a good weekend, and we will see what next week brings. Establish those game plans. You got a whole weekend now with nothing going on. Establish those game plans. Write them down. What names are you going to look at to buy once the dust settles? Are you going to be looking to short daily lower highs next time we bounce? Where are you going to be looking to short them? Etc.